Today's topic is by request from one of the show's listeners. I will be sharing some ways to build your credit scores quickly, and this is for those who already have established credit, and then ways we can establish credit for those who don't have credit at all. Hello and welcome here at the Dr. Sav Talks Money YouTube podcast. I share simple, practical tips, realistic strategies, and workable solutions that lead to financial freedom for women and women entrepreneurs. Okay, so before I even talk about those things that we can do, when talking about building credit, it is more than practicing, it's more about practicing good money habits because great credit scores follow good money habits. It's all well and good to try to figure out a way to boost our credit scores. You know, if we're buying a house, buying a car, we want to do that thing that's going to push our credit score up. But it is much more efficient to have good money habits that will lead to a great credit score. Does that mean things won't happen? No, it doesn't. You may have to end up filing bankruptcy. You may have to end up because of medical bills, losing your job, or, anything could happen that could cause your credit score to take a dive. The main thing is to keep in mind that good money habits lead to great credit scores. Because when lenders look at your credit scores, they are looking at you as someone who has the potential to pay them back or not. And so good financial habits, having a history of honoring our financial commitments, that sends a message to the lenders that you are good for it. So whatever monies you borrow, that you are more than likely apt to pay it back. So talking about that, now that we've gotten that out of the way, let's talk about what things we need to look at when talking about building our credit scores. The first thing we have to look at is the components of the credit score, because you don't know how are you going to improve something when you don't know what it is that you're improving. So you have to look at the components of the credit score, and there are 5 components. I'm dealing with FICO. For Vantage, there are 6, but I'm mostly dealing with FICO tonight. So we have to identify the components and see which one we can influence to build our credit scores quickly, because not all of them are parts that you can influence. You can't really influence. For example, the first one is payment history, and that's 35% of your credit score. You can't influence your payment history right away. So if you are looking to build your credit score quickly, your payment history is not one that you can influence quickly, because payment history is saying how well have you been paying your bills over time. So if you have not paid your bills on time over 3 years, and you decide for the next 3 months you're going to pay everything on time, your credit score is not going to jump as quickly as someone who's been paying on time. So the 35% is the one part of your FICO score, but it's not going to be something that you can influence quickly. It is more time bound. So you can't influence that quickly. Now, utilization is something that you can influence quickly. It's 30% of your credit score. And utilization, that simply means how much credit do you have and how much of it are you using? If you are using let's say you have $1,000 is your credit limit, and you're using 900 of it, you're using 90% of your credit, your credit, which is not good for utilization, because conventionally you want your utilization to be under 10%. So if you're using, and say $900 of $1,000, you have a 90% utilization, and that's going to be a significant impact on your credit score. So that is the main thing that you can influence if you want to increase your credit score quickly, is paying down your utilization, paying down your credit. Okay, so now we're talking about credit payment utilization. That is the one main thing that you can impact to move your credit score quickly upward. That leads me to credit cards. If you have credit cards and you want to make sure that you're paying on time and that your utilization is reported correctly to the credit bureaus, you want to pay attention to two dates. The first date is your closing date, your statement closing date. Your statement closing date is the date when the credit bureaus report to, the credit card companies report to the credit bureaus. So you want to be cognizant of that date. If you are, let's say you, again, $1,000 credit card, right? And you decided to charge $1,000 on that credit card. As long as you pay that before the statement date, the cutoff date, then you are okay, because then they will report 0% utilization. And that's what you want. You want anything 10% and under reported as utilization. The next date is your payment date. And that's the date if you did carry a balance and they reported a balance at the cutoff date, you want to make sure you pay at least the minimum. Really, you need to pay off the card, but you want to pay at least a minimum before the payment date. So the first date is your cutoff date. That is when it is reported to the credit bureaus. Now, for the credit, for the payment date, what I want to say is credit card companies have the same date. They must report your cutoff date. Your cutoff date has to be the same date every month. Typically in a 30-day month and a 31-day month, it's going to be a day different. So let's, in a all 31-day month, let's say your reporting date is set the 7th of the month. Every month in a month that has 31 days, they have, the cutoff is going to be the 7th. So you can verify with your credit card company, or you can look at old statements and you will see that the same date is a cutoff date every month on your credit cards. And a 30-day month, it may be a day earlier. So you want to pay attention to those dates, because those are the dates that govern what's reported to the credit bureau. So if you want to soar your credit scores real quickly, you have to be cognizant of those dates. Make sure you're paying so your utilization is 10% or lower, because that is what you can influence. Now, the other parts of the credit score that you can't influence as quickly is the credit history, which is 15%, length of credit history. There's no way, it's time bound. There's no way that you can influence that quickly. So that's not an area that you want to focus on if you're looking to soar your credit real quickly. Because if you have a credit card that's, say, 15 years old, right? Let me use even numbers, easier to divide. Let's say you have a credit card that's 8 years old, and you have one that's 10 years old, that's 18 years. Your age is going to be 9, because they're taking the 8-year-old, the 10-year-old card, they're adding it together, and they're dividing by 2 because you have 2 cards. And now your age is 9. So that's for those who are opening cards. Like, you go to the grocery store, you go to the store, and they say, oh, if you open a card, you're going to get 10% off. Every time you open that card, it decreases your credit age. So you want to be cognizant of that. And because they're taking the age of each card and divide it by the number of cards to get your credit age. So that is not something that can soar your credit quickly opening a new card, because your credit history length is time bound. The other two are 10% each, the credit mix and applying for new credit. Those two are, again, not two things that you can use to quickly soar your credit. All of these you can focus on to soar your credit. But the question that the listener asked was how to do it quickly. And the one category that you can focus on to move your credit score faster is utilization. Another way that you can focus on utilization is asking for higher limit. So again, I gave the example of the card where, you're $1,000, $1,000 is your limit on your card. And you're making sure that you pay on time, but let's say you couldn't pay on time. You couldn't pay enough to get you below that 10% utilization. One thing you can do is ask your credit card company if they would increase your limit, because when they do that, your denominator increases. Then even if your numerator stays the same, and for those who don't remember fraction, the denominator is bottom number, the numerator is the top number. Even if the numerator stays the same and the denominator, if the denominator increases, then your utilization will go down. So instead of now having $900 over a $1,000 card, now you have $900 that you owe over a $5,000 card. So you see that percentage has gone down a lot, and you still haven't paid. You still haven't changed how much you charge. It's still the same that you charged. It's just that your denominator has moved. So that's one way. So again, let me quickly run over the payment. The 5 parts of the credit score that you have is 35% is payment history, 30% is utilization, and the one that you can influence quickly is utilization, because you can manage how much you use on your credit. Payment history over time, there's nothing you can do. You can just continue to pay or start paying on time. Now, one thing I want you to think about is, if you and I'm going to say you and I have the same credit history. We have the same payment history. We have the same, our utilization is the same. Our length of credit, everything is the same in all 5 categories. But I have a bankruptcy on my report and you don't. Even when I pay my bills on time and I bring my utilization down and you do the same, because remember, our numbers are the same, right? The only thing is I have a bankruptcy in my past. If you pay down the same amount that I pay down, your credit score is going to jump higher than mine, because my bankruptcy is going to suppress my credit score. So even though mine moves, it's not going to move as high as yours. So that's one of the things you have to be cognizant with your credit. I hear people saying all the time, well, I paid off my student loans, or I paid off this. Why is my credit not moving? It's a factor of all things. So even though you can monitor and influence your utilization much more quickly to move your credit score, the other things on your credit report are also going to influence how quickly your credit score moves. So I hope that makes sense. If you have any questions, please put them in the chat and I will respond to them. And thank you, Sid, for joining us. And thank you, Camille, for joining us this afternoon. All right. So the other thing that I want you to be aware of as you're trying to grow your credit score real quickly is that all lenders may not report to all 3 credit bureaus. Because sometimes, even though all of the scoring models is the same, or they are the same, if I have a loan that's reported to Experian and Equifax, but not to TransUnion, that's going to impact how my scores report across all 3. So those are things. And then, of course, the timing of when they report it is going to influence it, because, of course, the timing, when it hits the algorithm, and the timing is different from Experian to TransUnion, it's going to make a difference how the score and how the computer picks up that new transaction. So the other question that the person asked that generated this topic today, the person asked, how do you establish credit? So I'm going to give two ways that you can establish credit. What I did with my daughter is I put her on my card as an authorized user. You want to make sure, if you have young kids, there are some credit cards have no age limit for when you can add people as authorized users, and some have as young as 13. So you want to make sure you have good credit before you add your child as an authorized user, because you don't want to mess up your kids' credit score. So if you have good credit and you want your child to establish credit, then you want to add them as an authorized user on your card. You don't have to give them the card. You just add them as an authorized user, and they will establish new credit. Another way you can help your kids establish credit is by have them open a secure card. And this is for those who are maybe 18 and over. have them open a secure card. And how this works is you open a secure card, and let's say it requires you to put down $1,000. So they have $1,000 that they can spend, only up to $1,000. And every time they buy something and pay it off, it's reported to the credit bureau. And so they are establishing credit by doing that. And that typically takes about 6 months for credit to be established with FICO. For Vantage, it's a quicker. It's usually maybe 3 months before credit is established using the Vantage model. But for FICO, it's usually about 6 months before it credit is established. Now, here are one other thing that you can do to build credit and also to score your credit, to soar your credit score, is to get credit for utilities and rent payments. You can ask your landlord or your utility company to report those to, those your payments that you're making there, and they can be used to boost your credit score. Now, the only drawback with that is the only company right now that's doing that, or the credit bureau that's doing that, is Experian. You can get what's called Experian Boost, and that will increase your credit score. The only problem is that, or the additional problem is, if your lender is pulling Equifax or TransUnion, then you may lose out on that. So just be cognizant of that. And for credit reports, I would suggest that you start putting credit reports for your young kids, because if somebody uses their credit in a negative way, you can start putting their credit report as young as 13 to verify that there's no hanky-panky, that there's nothing illegal happening. But they don't have a credit score until they're 18 and over. So for the person that asked this question, I hope this was helpful to understand ways that you can quickly boost your credit score, and how, if you're thinking about your young kids, how you can establish credit for them, or somebody who doesn't have credit. Because like me, I came to this country, I did not have credit, so I had to establish credit as an adult. So there may be people out there who are from different countries, and they come here to the US and they have to establish credit. This is one way they can do that, by using a secure card or being added as an authorized user on somebody else's card. Now, typically, scores 629 and below are considered poor. Scores 630, 689 are fair. 690 to 719 is good, and 720 and above is excellent. And it's not difficult to get to 720. It really is not. So I hope these tips help for you to look at your credit report, pull it out, look at your credit, look at your paying pattern, look at your credit history, and curtail how much you are seeking new credit, because all of that impacts your credit score. Thank you so much, and I will see you next week.